Hey guys, welcome back. In this video, we are talking about the AMC $7 target, 0 shares left, and many more in this video. Firstly, we're looking at this. Funny, this is the narrative from the street on why AMC rose by 6%. So when AMC went up about 5.31% yesterday, we saw them making the news talking about how this was excitement built around the upcoming documentary release, The Story of Everything, which significantly outperforming the sector's 0.78% gain. And we've seen plenty of news like this before. Every time AMC goes up more than 1-2%, we're talking about anything that's 5+, we see these news articles that are released about AMC that they're trying to say is the reason for why AMC has gone up. We've seen it in the past before about how AMC made a record popcorn selling revenue, but then a week later when AMC went up, we saw media articles talk about that the reason why they went up was because of a week-old news. And then they changed it, and we've seen this happen multiple times. And so the real reason for why this is obviously happening is because they don't want people to realize why AMC is actually going up, why people are actually buying AMC. And just like we're seeing today as well, AMC is up 2.54% as the market has ended. And this is during a time where we're seeing volatility in the market right now. We're still seeing some stocks in the red when we take a look at the tech industry. And this goes on to what we've said in the past before. AMC has been deemed, and the industry has been deemed, as one of the safe havens for investment. At times like this, where not only are there fears of market recessions, and this is something we've talked about, but because of the ongoing situation globally as well, they want to find better and safe investments. And in this case, AMC being one of those, and is why people are obviously buying into AMC, is why we're seeing AMC up 5%, 2%, despite the fact the whole market is tanking. And you can also see this for the share availability as well. It really just goes on to show the desperateness and how much demand there is for AMC shares. And the reason why this is important is because if there isn't a demand for AMC, then that would mean that there is no volatility. That would mean there is no potential for AMC. But the very fact that the demand is there, the very fact we're seeing short shares availability go to 0, it just showcases, at least to me, why there is so much potential for AMC. Share availability trending low. Does it mean it will stay 0? No. Does that mean they are borrowing? Yes. More shorting, more exposure at these lows. Downside potential limited, yet shorts keep coming with massive upside potential. And what you will see is, once again, we talked about the shares being at 0. This is something we've seen in the past before. And this highlights multiple different things. Firstly, by having 0 shares availability, it goes and talks about the demand we were mentioning earlier. Secondly, every time we do see that, it goes from, you can see here, 100,000 to 50,000, then to 0, and then suddenly it magically appears back to 100,000 or 150, 200,000. We know that most of the time it isn't because people are returning these shares, but rather more synthetic has been created and injected into the system. So not only does the short shares availability show us the demand of these short sellers, shows us how desperate these short sellers are, but it also showcases how much synthetics are being created every single day, and especially at times like this when AMC is seeing green days whilst the rest of the market is tanking. And we're also seeing this with pre-market volume being extremely low, like you guys can see here. Now, the reason why I find this interesting is because this is happening, like we mentioned, during a time where market collaterals are decreasing in value, where stocks are being extremely volatile. We're seeing massive things happening within, silver, within gold, within oil, within natural gas. And it looks like they are struggling to keep everything under control, and they don't have the time and resources like in the past before to fully go 100% on suppressing AMC, hence why we're seeing the low in market volume. But it still shows that they're trying to suppress it, just not as much as before, or at least as much as they want to, but because we can see it from the short availability. Now, remember, AMC will be the greatest squeeze of all time. AMC squeeze will be bigger than anything anyone has ever imagined. And this is something that we've seen in the past. And this screenshot is a very, very important screenshot. Just like we talked about earlier with how they create synthetics, with how much value is being involved. Remember, the biggest reason for why Robinhood stopped AMC, why they stopped the buy button and got rid of it, was firstly to protect their brokers because they are the biggest selling of data for payment for order flow to companies like Citadel, so they obviously want to keep them alive, but also because of how much margin was being used for AMC and GameStop. And this easily could have broken not only these brokers, but also these market makers as well. And this is why we believe and understand that the AMC squeeze will be much bigger than anyone can comprehend. Now, we're seeing AMC up 5%, and there are some things to be mentioned. Firstly, this is a pushback to $2 in an announcement on Avengers Doomsday. But if GME does in fact acquire AMC theaters, expect a run to $7. So the reason why I want to talk about this is because there are multiple things. Firstly, the announcement on news is obviously very good because things like Doomsday, things like these massive movie franchises will make the box office thrive, like we've seen with Avatar last year. But also it's talking about the run to $7. And the reason why this is important is because it could be the start to the squeeze. Now, in the past, we've mentioned about different areas where people have stacked a lot of short positions. And we deduce this from previous data. So we know at $2.10, so $2.10, you guys can see here, around this area, we see that people have bought a lot, or rather short sellers have stacked a lot of short positions. That's what we've seen in the past. We've also seen it in various different areas as well. We've seen it at 330. We've seen it around at kind of the 450. We see it a lot at the $7 to $9 area upwards. And so these are just some of the areas that we've seen where short sellers have on the public. And this isn't even mentioning the synthetics that they could have created. This is just talking about the data that have been reported. We know they've created those positions. And so if we were to see AMC having a run up, and we're not even talking about a massive run up because AMC going from where we are right now to $7 is an extremely normal thing. It just reflects the value they should be, but it has a bigger effect than that because when we go up, we are crushing millions and billions of dollars worth of short positions, even by the slightest amount of incremental movement. And so when we go to $2.10, we're going to be seeing these short sellers get flushed out. When we go over to $3.30, we're going to be seeing them flushed out. When we go over to $5, we're going to see them again flushed out. And then $7 to $9, we're going to see them get flushed out again. And so this is why if we're seeing any news that allows AMC to go even up to $7, this once again, a very, very small movement in comparison to where I think AMC truly should be, but it will still have a massive, massive impact. And it's why we've mentioned that previously when AMC saw its way going up to $2.10, we started to see the dark pool go from 60% all the way to 90%. That's because they realized how much power AMC had. Remember, when AMC and GME squeeze, the market cap is meaningless and holds no relevance. And this is what we've said, and this is why they're worried, because AMC can go to thousands, if not tens of thousands of dollars. Everyone has their different price in mind. And I'm not here to tell you what price. What I am here to say, though, is that this can easily be triggered just by AMC going up to $7, just by AMC going up to $10, because of the short sellers that will get crushed. And it just talks about how powerful that can be. And another hypothetical is that AMC 700 million flow after refinance. If they issue a 0.05 dividend, $35 million AMC expense, but if 5 times float counterfeited, 175 million expenses short must match, causing some to close out, push AMC higher, repeat each quarter, shorts panic to exit, stocks keeps rising. So what does this mean for those of you who may not understand? We talked about this. When the company issues a dividend, the short sellers have to bear that cost first, meaning they are the ones who have to give out these dividends before the company even has to. Now, understanding that after refinancing, AMC will have 700 million shares. So at 0.05, they will have to use $35 million to give out these dividends. However, If 5 times what the float would have been synthetically created, and bear in mind 5 times is a low in comparison to some data that we've seen in the past, but we'll use 5 times in this example. If 5 times the float exists, that means short sellers, and because this won't be a cost that will be bared by the company, because these are all counterfeited, these are all synthetics. So these costs will have to be bared by the short sellers. They will have to pay up $175 million. Now, for some firms that have billions of dollars, this is obviously nothing. But for some small short sellers, this is going to have an effect. And so that's already going to force some short sellers to go out. But the biggest thing is that if AMC were to continuously be able to do this, now in this case, we're talking about each quarter, which once again could be possible depending on the finance. But if we're seeing AMC doing this regularly and force short sellers to continuously issue out 175 million, you can see how that's going to eat into their capital and force them to panic exit the shorts. And this is something that we have always talked about in the past. Now, we're also looking at this right now. Key reason the action of whitewashing the balance sheet. AMC has executed classic pre-merger activity is coming soon. And this is just some things that people are obviously being talked about. Now, does this mean that this is going to happen? We've seen plenty of rumors when it comes to AMC, when it comes to GME. And this isn't me trying to obviously throw it off by saying, no, it's not possible, because anything is possible. We've seen plenty of times of how massive things have happened. But this is just showcasing what is a possibility and what we should be looking out for. So feel free to obviously take a look at this as well, because I do think it's interesting and it's something that AMC can, of course, do. We're also looking at big money coming into AMC. We've already talked about this, but I just wanted to show you guys in terms of when we talk about how AMC is the safe haven, it isn't backed without data. When you take a look at the current institutional ownership, the current inflow, outflow of capital into AMC, you realize that more and more people are buying and less people are selling. And at times like this, when we're seeing the market being extremely volatile, when we're seeing these stocks having massive red days, but yet AMC is still green, AMC is not being sold off, it just showcases the confidence that investors have in AMC. Now, the outlook for AMC is debt restructuring and interest relief in Q2, strong domestic box office revenue across Q2, Q3, and Q4, path to profitability with reduced interest cost and high attendance, especially with what we talked about of restructuring of the debt, and how AMC stocks should begin to reflect on this operational success. Now, we are going to be faced with traffic. We are going to be faced with, of course, these hardships as well. But this is something that will allow AMC to, of course, grow. And, you know, this is a rumor that has been finally confirmed today, where previously there was a claim that Anne Marion paid millions of dollars for Nicole Kidman to be in the AMC commercial. I'm sure many of you have seen that. Now, it's been confirmed by Nicole Kidman today that she was not actually paid for the commercial. She did it for free. And so this once again is just showcasing how these media articles are out to try and get AMC to put negative shades on AMC, despite not being the case. And this is a very old post, but I'm going to show you guys again. Remember, when we talk about all of the data earlier, and why I say it's the minimum, why I talk about how there could be, more than 5 times, it's because we've seen in the past about how swaps have been used as well. And this is one of the biggest reasons for why I say there are more synthetics out there than we think. Now, today, there's also another glitch being shown for GME. So yesterday, we showed this as well. Today, there's also a glitch of 33 quadrillion volume for GME. And we've already talked about how this is something that only happens to AMC, only happens to GME. And every time we do see these glitches happening, it's at times where there are extreme things happening. And in this case, massive volatility, massive collaterals failing in value, and suddenly we're seeing glitches happening for GME. And so it really answers that question of, are there manipulation going on behind the scenes? To me, yes, there are, because these things have happened too much for it just to be a normal coincidence. Also, looking at the undervaluation of GME, you can see GameStop estimates are in, and GameStop is undervalued by 78%. Fair value of $110 per share. And this is what people are, of course, talking about. Now, we already know the undervaluation of not only GME, but of course AMC as well. And we will never know, in my opinion, we will never know the true value, because not only do you have to look at it from a fundamental perspective, but you have to realize if we ever allowed true price discovery of AMC, of GME, how much would that actually bring when you consider the investor sentiment as well? Amidst all of this, GME warrants just hit an all-time high cost to borrow as the fee soared to 126.5%, hinting at a potential need for these warrants, hinting at potential things for what's happening, especially with the acquisition rumors as well. We're also looking at US Gulf pulling some bond buybacks, like $4 billion face value on these 2029 to 2030 ones. Looking at this because it's a hint to the liquidity, and a big thing for liquidity is how these short sellers are affected, how they can affect AMC and GME short, and this could of course be one of them. Also looking at BlackRock slashing private loan value from 100 to 0. We've already talked about within the PE space, we're already seeing how things are crumbling, and so it won't be long until we see a massive thing happening. And when we take a look at HYMC, you can just see how well they're doing. And we mentioned yesterday how they've put into a different index, which has now been required to be bought by ETFs and index funds. And this is extremely good for HYMC, and we're expecting more and more volume. As always, on this financial advice, I do take quite a grain of salt, do your own due diligence and research, and I'll catch you guys next time.